Alright, hello and welcome to Camel Finance. I'm your boy Camel and I've got quite a nice one today and I've made some changes to my positioning, so I'll show you that. Let's get into it. The UK lawmakers are voting to recognise Bitcoin and crypto as regulated financial instruments. So this sounds wholly positive. Obviously we've just got a new Prime Minister, Rishi Sunak, he's being painted in this light as bullish for crypto, but I just want to step back to reality here a little bit and remind you that first of all, China's foreign minister is telling us they want to advance their ties with the UK under Sunak. Okay, so is this something you really want? Do you really want somebody that's going to advance their ties with China? To be honest, that's not something I really want for this country. And you can't be pro-Bitcoin and pro-CBDC. Any politician that says otherwise is a fraud. Rishi Sunak also has deep ties to the WEF, has deep ties to all of this stuff. And I think I'm seeing a lot of people say this is really bullish for Bitcoin. I don't really know. I don't really know how you can say having a PM that wants CBDCs and whose father develops a digital ID company is bullish for crypto. The WEF trying to advance their totalitarian takeover. So if you're one of these people that is championing Sunak and thinks he's going to be really good for Bitcoin, then I have to disagree. He might be good in the sense that people will hopefully opt out of this system and choose Bitcoin. And there is certainly hope, because a year after Nigeria has launched its CBDC, only less than 0.5% of Nigerians are actually using it. The Nigerians do not want a CBDC, they want Bitcoin, and this explains why they are seemingly crypto obsessed. Nigeria tops Google Trend search for cryptocurrency info and how to buy Bitcoin. So if this is why you believe that this could be bullish for Bitcoin, in that people will realize they do not want a CBDC and they will exit the system to Bitcoin, then yes, I agree. But if you are one of these people that thinks having somebody like Sunak as Prime Minister is going to be bullish because he's going to be kind to regulation, then I would caution you to think again. It's been exactly 11 years since the first ever physical Bitcoin is bought and sold. Each coin below is worth $500,000 today. So if you haven't been in the space very long, you probably aren't aware of what these are. These were copper coins, as you can see. They are physical Bitcoins, and they were minted back in 2011 with a holographic sticker on the back. And by peeling that holographic sticker off, it's kind of like one of those tamper-proof seals. Once you peel that off, it reveals the private keys to a wallet address containing half a Bitcoin, 1 Bitcoin, up to 1,000 or a couple of thousand, I think. So this was a way of actually holding physical Bitcoin that you could redeem on the blockchain. A very nice idea. Would have loved to have had one of these as a collector's item. However, having a single point of failure, such as a man that is minting these coins and selling them, means that the authorities could get hold of him and force him to stop producing these, and that's exactly what happened. So unfortunately, these are never going to be seen again. And this is a big reason why we see Bitcoin as a decentralized network. There is no one person whose door you can knock on to shut the Bitcoin system down. There is no single point of failure because Bitcoin is decentralized and distributed worldwide. Cash App enables people to send and receive Bitcoin via Lightning for 40 million users. This thing is growing. It's becoming much more user friendly. I noticed quite recently I've been sending Bitcoin around, helping family members send Bitcoin around, and it has gotten instant. It's gotten incredibly quick thanks to the integration of Lightning. I can certainly remember a time when I would send Bitcoin around and then it would disappear for up to a few hours, and you'd be sat there scratching your head thinking, is that going to turn up? I hope it's going to turn up. Of course it always did. This is certainly much easier to use now that Lightning enables instant payments. Interest in Bitcoin has surged amongst the super rich in Hong Kong and Singapore, according to Finbold, and I suspect this is going to continue as inflation is clearly not going anywhere, as we are seeing the central banks have to step in and print money in the middle of a hiking cycle in order to buy bonds. Super rich, of course, are more financially literate than your average Joe, and therefore it's only natural that they're going to seek a safe haven asset such as Bitcoin. Twitter is working on a Web3 based crypto wallet prototype that makes it possible to deposit and withdraw cryptocurrencies. So is this something we're going to see in the future? Are we going to be able to have some sort of integrated crypto wallet with the Twitter platform so that we can send each other money and pay for goods and services via Twitter? It certainly seems that way. In other news, Bitcoin once more is nearing the end of a bearish cycle, shown as a red box in this chart. The ultimate oscillator has dipped to oversold and is now increasing. Volatility decreases. This looks like how it looked in previous cycles. Exciting times ahead. Red box for the bottom of the bear market, around 80% down. This time only 74% down, but I think that's okay because we didn't go up as much as we did in the prior times, so there's less to average out on the downside. And you can see here, this looks exactly how it looked before when we have formed major lows. So We're certainly close. I know some people are championing one more dip lower. That remains to be seen. It certainly can't be ruled out. Meanwhile, 42 million addresses now hold Bitcoin. This number is only going to increase, I'm sure of that. And did you know that Bitcoin's hash rate is up 181% since the bottom of the China mining ban crash? So China banning mining really did nothing. They banned mining, and yet 20% of the hash rate still comes from China. And this, of course, is underneath one of the most totalitarian and controlling governments on the planet. This, of course, is a country that has CCTV everywhere and a censored internet and a social credit score system and a central bank digital currency, and they still cannot prevent people from mining Bitcoin to the extent that 20% of the hash rate comes from China. Let's keep going. I had to bring this up. I'm not picking on this guy, but I did think that this was funny. This guy must have sold his account to a market maker. Okay, he was bullish the entire way down, and now we have gotten to the bottoms, and he's championing one final low. I just don't understand. I don't understand how you could be bullish the entire way down and then all of a sudden be championing one more 50% drop. Now, I'm not saying he couldn't be right, because he certainly could be right, but I just thought, this is crazy. I've never really seen anyone do this where they were bullish the entire time, and then we get to the bottom. We've been basing for almost 4 months and trading sideways with volatility decreasing, and suddenly he's championing one more low. I mean, personally, I don't know. This just seems suspicious to me. Let's keep going. Bitcoin is more stable than the stock market. Volatility has been compressing. We did see a little pump. I'm sure this is going to get faded into the cycle low. We'll get to the charts before too much longer. Remember, the US Treasury Secretary is saying that the 20-year bond is less liquid. No decisions have been made on it, but it's conceivable something could be done with buybacks. They're talking about possibly getting this printer spooled up and doing what we've seen the Bank of Japan, the Bank of China do, and the Bank of England, which is where they have to be the buyer of last resort because there is no bidder. Printer is coming. There's no bidder for these bonds, and you can see that here. The Fed bids for the 2-year notes total $0 million. There's no one wanting to buy these bonds, so the central bank always has to be the buyer of last resort. Printer is coming. You best believe it. And in China, things are even worse because they've ordered the state banks to buy stocks to contain the selling after their stock market is crashing. We're likely going to see this from the Fed, although I think that might be a couple of months away before they switch to buying back stock. I think that could possibly happen early next year, perhaps February. But, like I said before, make no mistake, printer is coming. Investment managers are very underexposed to stocks. Imagine the move when they realize they overdid it. And if you're wondering exactly how it is that all of the fund managers and hedge funds can be so wrong-footed, it's because they are trend followers, okay? They find a trend and they jump on that trend and they ride the trend. They are not bottom pickers. They're not looking to catch fallen knives. They're looking to squeeze as much momentum out of the markets as possible. They are trend followers. The trend has been down all year, and this is why it's so dangerous, because they are all piled up one-sided. Once we get a turn and the trend becomes clear to the upside, they will all do an about face and start following the trend to the upside. That is how it works. For now, this remains as rocket fuel for any kind of bear market rally or potentially a short squeeze and a blow off top. Hedge funds just continue to up their bearish position on the S&P 500 futures. They remain net short. Okay, again, this could well be fuel for a massive upside rally. US rents are declining month over month. So what we are likely to see is CPI come off heavier than we have done over the past few months. Of course, it's a completely manipulated metric, but when we get the CPI print in a couple of weeks, it certainly will be market moving. Stocks rally after the Treasury yields dip on the hopes that the Fed will slow rate hikes. They've been priming the market. They've been letting people know that maybe they're going to do one more 75 basis point hike and then start to slow down the pace with which they are hiking. I think any dovish language from the Fed is going to result in major upside rally, and I think that's why we're seeing some of this pump play out at the moment, because the markets are forward looking. They are starting to price in this Fed pivot, and any dovish language, I think, is going to be a catalyst for upside moves. I have to agree with this 100%. I think there are only two paths from here. I think we either go straight up, have this blow off move where all those puts, all of those hedges, all of the funds get completely wrecked to the upside as they're forced to cover their shorts at record levels. Remember, the shorts are piled higher by about 60% than they were during the great financial crisis of 2008. Okay, so don't say there isn't fuel for the upside. Max Pain is certainly up, not down. But we could, of course, get one more drop into that cycle low. That remains to be seen. Google missed and Microsoft beat expectations. We also know that Tesla did okay and Apple have its results tomorrow. Show me the charts and I'll tell you the news. Remember I was saying this? Show me the charts and I'll tell you the news. The charts say the cycle low is due around this time and a big bounce is coming. So that remains to be seen. Let's get into the charts because I did make a couple of small changes to my holdings, so I want to be transparent with you about that. First of all, the dollar is coming off. We have reached this red trend line. Now, it's important to note that we expected this. I've been saying this is likely to happen. I think it's only natural that we get some level of bounce from here, some level of reaction, whether that is a small bounce that fails or whether that is a big bounce to new highs or anywhere in between remains to be seen. But I would think it would be quite strange to just see us completely hot knife through butter through the support. It has been good support many times in the past, as you can see, so it's only natural that some buyers will want to step in here. How high up we go, that remains to be seen. Perhaps we could see a move back to this blue line before having a crack at breaking down. But given the weakness of the dollar, I had to modify my gold position. I didn't have to. There's nothing wrong with holding this short. The first thing I did was I take the stop to break even, but then I realized I can just hop in and out here. So that is what I did. As of yesterday, once I started to see that the red candle from yesterday turned to a green one, then I closed my position here for a bit of profit. So I've technically jumped out like this, which you might be thinking isn't the best idea, but I didn't want to, since I've been holding this trade for a couple of weeks, I didn't want to walk away with no profit. So I've booked profit. A trend line break of this blue line here, let's color this yellow so we can see. A trend line break of this yellow should result in a dive down quickly and rapidly to the cycle low, if that's going to occur. So on a trend line break of this, I will be looking for a short position to re-enter. So let's put this here on a trend line break of this yellow, and I'll move this stop probably to wherever this swing high forms. So I'll leave this like this for now. So if you are still holding a short, there's nothing wrong with continuing to push this trade, okay, or taking the stop to break even and riding it to there. But for me personally, I have no problem just hopping in and out. So I book some profit. If we break above the blue line, then that will be a long from me. And if we get rejected, which is what I suspect will happen, and break this yellow trend line, then I will re-enter my short. So for all intents and purposes, I'm still expecting this to dive down. But given I've been holding this trade for a number of weeks, I wanted to walk away with some profit. And like I said, I will jump back in if we break this yellow trend line, or I will flip long if we take out the blue line. Either way, I still think that we're going to end up making new lows. But the dollar is at the moment obviously coming off. If the dollar can bounce off of this, then you would expect that to put pressure on gold and we get that final dive down. So I've set an alert for that yellow trend line on my main account, and I will be re-entering my short on a break of that. I've added a long in Apple on a longer term account because we have an undeniably bullish looking chart. Look, consolidation under, breakout, retest and go. So how do you argue that this isn't bullish? Doesn't mean it couldn't be stopped, but I've added this to a longer term account. I've also added Tesla to a longer term account because this was a nice, look, once failed double bottom and now we're out. So I got in here very early, very good risk reward. I actually think that on a longer term account, this could be as high as 420 or 440. So I'm expecting to hold this for a lot longer, but I've added Tesla. I also have added the NASDAQ. Now the futures have given up almost all of the gains from yesterday, but you'll hopefully see my logic here. We had a trend line break, consolidation under, breakout, retest, resumption, and above this line. I don't know how you could call this look bearish. This is not a bearish look to me. So it could easily retest. We could easily come lower. That remains to be seen. But for now, I am long the NASDAQ, and I feel like I've covered all my bases, because if the S&P decides to do what I think it will do, which is roll over and drop into this cycle low, which isn't due until perhaps the end of the week or early next week, then I can enter on a cycle low there, and that would be a perfect trade entry for me. So if we're going to just melt higher now, if we're going to rip higher in equities, like we're seeing from the Dow, like we're seeing from the S&P, if this is going to happen, then I have exposure via the NASDAQ. And if not, then the S&P, which usually obeys these cycles very, very well, that will be plan B. If I have to give up a stop, well, I have to give up a stop, and then we can re-enter at that cycle low. That's not a problem to me. But if this is just going to do what I think it's going to do, which is just blast through here, then I've got exposure either way. So that is that. I've been talking about being patient for the UKX. If we could actually get one more push down, then I think a trend line here could come and the breakout can be bought. I think this is what that trade will look like. However, there's a chance that this is just going to sort of waddle out of here. And if that's the case, then I might let this trade go and focus on the equities above here, the US equities. So that's fine. Each to their own, of course. Coinbase, I can't get excited about this because we're too far from the cycle low. The same is true of MicroStrategy. You'll see I've added these longer term account notes here. Once we get that cycle low for MicroStrategy Coinbase, I will be adding these positions to longer term accounts. I've done the same for Riot Blockchain. Riot looks a little bit more bullish, but I would expect this is probably going to roll over soon. And the same is true of Marathon. Look, Marathon is right out. So will we get some sort of drop back? I would think so. These are both highly correlated to Bitcoin, although these are higher beta at the moment. It's Bitcoin. So I think people are getting excited. This looks like a breakout. I would ordinarily be very excited about this, but it's just far too early, in my opinion, to call this a cycle low or this back here. This would only be day 44 of 60. Now there is a 10% tolerance, so 54, but that means I still think we're at least 10 days away from a cycle low. And as such, I have no problem and I'm perfectly comfortable holding off buying yet, because I think even if we were to see a move all the way to 25k, then we'll get this drop down and that will become the cycle low and the highest probability entry. So I continue to play patient. I continue to wait for Bitcoin to do that. Ethereum, if I change the color of this to red so we can see what's going on, oh, that connects those highs. So if I continue to extend this, it's likely, I think, that we're going to run into that and then drop into this cycle low, maybe a bit higher, and then that becomes a long from me. A lot of risk with this coin. I really don't want to be honest, I really don't want to hold much of it because I'm worried the SEC is going to come after the Ethereum Foundation. And like I keep saying, when that happened to XRP, they lost 90% of their value on their token. So that's not something, that's certainly something that's a risk. But if you're interested in trading Ethereum, this is how I would play it. I would wait for this to drop into this cycle low, and then I think it's longable. As long as you've got a stop, it's fine. XRP continuing to range between, what's this, 55 and 41 cents. So I expect to see this move. It'll probably get going once we found a cycle low, but I expect maybe another 10 days of chop in here. I added a MATIC position. I knew there was something I hadn't covered yet. So again, it's the same thing over and over again, isn't it? Breakout, retest, resumption above the high. So how do you call that bearish? To me, that's not bearish. I have to be open to seeing this roll over if Bitcoin is going to form its cycle low, but this looks to be leading. MATIC looks to be leading. So if it's going to lead, well, you've got to let it lead, right? So breakout, retest, resumption all day long. I was a bit late to this, probably should have got in a couple of days before, but better late than never, right? Zcash, I've also lined up a longer term holding here. So I think it'll move up a little bit, like I said, with Bitcoin, drop into this cycle low, and then it will go, and I will tuck some of that away because why not? Chart of Truth, I think possibly it could break down here, but I think likely it's got to run a little bit higher just to price in this 75 basis point hike, and then potentially it can break down. And when it does, I expect risk to come on very, very strongly. So the stars are slowly aligning. I think risk is to the upside at the moment, although that is not a popular opinion in the market. I hope all of that is clear. I hope you enjoyed today's episode. I hope you're doing well in life. Let me know if you have any questions or comments, and I will be back tomorrow. Make sure you're subscribed if you want to keep up with how I modify my trades and positioning. Still looking to get long on a couple of areas. Still looking to add to my short on gold or flip long if we get a trend line break, as I said. Looking to add a lot of minor exposure and Bitcoin and crypto positions as we get to this cycle low. That's around 10, 11 days from today. So we'll see how that goes. Make sure you subscribe if you want to follow all of that in real time. And I'm going to leave you with this clip today, which is the best Bitcoin explanation of all time.
What is Bitcoin? Bitcoin is the world's first cryptocurrency, and it works because of the world's first public blockchain network. What does Bitcoin do? It's simple. It lets you send and receive value to and from anyone in the world using nothing more than a computer and an internet connection. Now, why is it revolutionary? Because unlike every other tool for sending money over the internet, it works without the need to trust a middleman. The lack of any corporation in between means that Bitcoin is the world's first public digital payments infrastructure. And by public, I simply mean available to all and not owned by any single entity. Now, we have public infrastructure for information, for websites, for email. It's called the internet. But the only public payments infrastructure that we have is cash, as in paper money. And it only works in face-to-face transactions. Before Bitcoin, if you wanted to pay someone remotely over the phone or the internet, then you could not use public infrastructure. You would rely on a private bank to open their books and add a ledger entry that debits you and credits the person you're paying. And if you both don't use the same bank, well, then there'll be multiple banks and multiple ledger entries in between. With Bitcoin, the ledger is the public blockchain, and anyone can add an entry to that ledger, transferring their bitcoins to someone else. And anyone, regardless of their nationality, race, religion, gender, sex, or creditworthiness, can for absolutely no cost create a Bitcoin address in order to receive payments digitally. Bitcoin is the world's first globally accessible public money. Is it perfect? No. Neither was email when it was invented in 1972. Bitcoin's not the best money on every margin. It's not yet accepted everywhere. It's not used often to quote prices, and it's not always a stable store of value. But it is working, and the mere fact that it works without trusted intermediaries is amazing. It's a computer science breakthrough, and it will be as significant for freedom, prosperity, and human flourishing as the birth of the internet. And Bitcoin is just the beginning. If we can replace private payments infrastructure, then we can replace other private choke points to human interaction as well. Now, why should we want to build more public infrastructure? Why should we embrace blockchains over corporate intermediaries? Why should we tolerate their inefficiencies and work to make them better? Why should we want the pioneers of this technology here in the United States and not fleeing overseas? A simple reason. Because the corporate intermediaries providing today's critical but privately owned infrastructure are becoming fewer, larger, and more powerful, and their failures are increasingly grave. So roughly half of all Americans, 143 million people, had their Social Security numbers exposed to hackers because of a breach at Equifax. The SWIFT network has relayed hundreds of millions of dollars in fraudulent transactions because of hacked member banks in Bangladesh, Vietnam, Ecuador, and Russia. The FBI suspects now that the largest of these hacks was perpetrated by North Korea. Corrupt, low-level employees at an Indian bank, Punjab National, were able to fraudulently certify SWIFT messages stealing $1.8 billion. It's the largest electronic bank robbery in history. In fact, it's the largest bank robbery in history. In October 2016, an estimated 1.2 million internet-connected devices were hacked and turned into a botnet that for several hours made prominent websites unavailable across Europe and North America, including CNN and Fox News, the New York Times, and the Wall Street Journal. Increasingly, physical machines are being connected to the internet to augment their capabilities. They're wired through servers that are owned and maintained by private and trusted intermediaries, the so-called Internet of Things. Pacemakers from St. Jude's Hospital have been hacked. Baby monitors from TrendNet have been hacked. And Jeeps from Jeep have been hacked to the point where they can be remotely commandeered and driven off the road. Now, those vulnerabilities are inescapable in systems that have single points of failure. It doesn't matter if the point of failure is a corporation or if it's a government. There shouldn't be a single point of failure. Similar choke points existed before the internet. If you wanted to deliver a message, you'd have to go through one of 3 television broadcasters or a handful of newspapers. Private corporations are essential, but no critical infrastructure should rely on 1 or 2. The internet removed single points of failure in communications infrastructure and ushered in a wave of competition among new media corporations building on top of its public rails. Blockchains can similarly disintermediate critical payments and IoT infrastructure. The technology is not yet ready to answer all of those questions today, but it is our best hope. And as with the internet in the 1990s, we need a light-touch, pro-innovation policy to ensure that these innovations flourish in America for the benefit and security of all Americans.